Welcome back. You're watching IndianOpen right here on BloombergQuint Live. A quick glance at Asia right now will tell you that it's a slight bit of a mixed session, but more positive nonetheless. Japan is trading higher by about 0.75%, with the SGX Nifty, which is up in the session by about 0.2%, about 11,558. Interesting, Neeraj, yesterday we didn't close at the lowest point of the day. We actually managed to pull back closer to 84 points in the Nifty. But the key pain and the key drag comes in from the Nifty Bank. We saw the private banks, PSU banks, the PSU banking index was down 3.5% yesterday.
Yeah, and the market breadth stayed terrible, and that's the fear today as well, right? We might start off in the green marginally at that, but if the susceptible names get through a bout of weakness again, it might just induce that whole sentiment negativity for a large portion of the traded market, which might not be positive. FIs too sold net sellers yesterday as well.
Yep. There were net sellers, 400 plus odd crores is what they sold out of. But let's also get in a sense as to what they did in the derivative space and also how the setup is looking like this morning. Agam Vakil is standing by with the details. Agam, good morning.
Good morning, Devina. Well, for now, of course, things were looking a tad wobbly, considering we did see some more weakness come through as far as indices are concerned. And coming down to your futures, well, it did see an increase of as much as 1% in open interest. But as you have also, mentioned the bank Nifty, well, that's where there was a lot of weakness, where the index was down around 2.6% and a 37% increase in open interest towards shorts. So that certainly remains something to watch out for. A lot of volatility induced because of that. Speaking of which, let's talk about your options and how things are panning out there. Of course, the VIXs are down by as much as 1.5%. This is despite the fact that we saw indices come off at around 15.9. But let's also talk about how things have panned out as far as your open interest in the options is concerned. And it is the 11,500 call, which remains the one with the max OI. In fact, if you actually go and take a look at how the change has come through, you will see there's been more writing around the calls and very little activity around the puts. So we're clearly seeing a lot of resistance building in as far as the higher levels on the Nifty are concerned. But moving on to the other factors, we do have stocks which are in focus. There are no stocks in the F&O band just yet, but a lot of weakness in IDFC First, RBL Bank, Piramal Enterprises, HDFC Bank, all of them from the financial sector, looking at a drop and looking at a substantial increase in open interest towards selling. Hexaware stands out, along with perhaps something like an HCL Technologies. But let's talk about those stocks which are seeing unwinding to some Manappuram Finance, Container Corp and Jubilant Foodworks. A mixed picture here, but it is once again the financial space which will be in focus, and we'll have to see whether or not there is a little bit of a recovery in store, or can we expect more weakness as far as banks and NBFCs go.
All right, Agam, thanks very much for that. That's a quick wrap of what happened in the futures and options space. Can't take eyes off what happened to Indiabulls Housing Finance yesterday. The stock plummeted about 35%. It was not just damage to Indiabulls Housing Finance, but collateral damage across Indiabulls Group stocks. So Indiabulls Ventures, Indiabulls Real Estate, they were both locked down on lower circuit. And, hopefully let's see what happens today. There were some clarifications that came about in the conference call held by Indiabulls Housing Finance. Mr. Gagan Banga said that they still have cash on the book to suffice them for an entire year. But, with all this remaining as an overhang, what does it do to their capabilities to raise funds in the future and to make sure that, they manage to push out credit into the system as they would have anticipated?
Yeah, I think that's, you summed it up. That's essentially the question that we'll ask Gagan Banga as well when he joins us later on today. You might have cash to tide you through a crisis. People don't invest in the stock because companies can tide over through crisis just alone.
With buffer cash.
With buffer cash, you need to grow, and one doesn't know how will Indiabulls grow. How will they get depositor money at a time like this when there's such a big crisis of confidence? So there's an issue at hand for sure. It's impacting the other group companies as well. Let's wait and watch. So this remains the top draw, but the collateral damage, Devina, that we've seen on IndusInd, Yes Bank, RBL Bank, it's nothing to scoff at. These are sharp gashes that are happening.
HDFC too has exposure, HDFC Bank.
Yeah, but I think the report that I read today, Devina, suggested that maybe the likes of IndusInd Bank and HDFC Bank, and IndusInd Bank's clarifications yesterday seem to suggest for them, because the exposures were dated as of December, some of these monies could have come back. But the fear that the market would have would be for some of the other names wherein you don't know.
And for Yes Bank, it's whammy after whammy. It's like they're really looking hard for some good news, but it's just so difficult to get.
Yeah, Ravneet Gill yesterday, incidentally, to his credit, did put out some pieces of news as well to BloombergQuint, saying that their numbers haven't changed since the declared numbers last quarter. So let's wait and watch. But so much more to talk about, and we'll do that with our experts who will be joining us any moment. But first, let's take it to our research team to try and talk about some key stocks in news, brokerage notes, and essentially the summation of the stocks that you need to monitor today. Because there was a lot of core data and the macro data that came out, but the stock-specific news impact being analyzed by both Darshan and Amit. Good morning, both of you. Darshan, the stocks in news first.
Yeah, so a couple of sectors will be in focus, especially, the upstream companies like ONGC Oil India, the pipeline companies like GAIL. So they will be in focus given the fact that there are changes as far as the natural gas prices is concerned. So for the second half, the government has set the natural gas prices down by almost 12.5%, and natural gas prices for difficult fields has been set down by 10%. So this is negative for companies like Oil India, ONGC and GAIL, while this is positive for some of the companies that use this gas, like your tile ceramic companies, your fertilizer company, the city gas distribution company. So that obviously all of them will benefit in trade, while the upstream companies will be negative. Cadila Healthcare will be in focus. They have sold one of the products to Medicure. The upfront payment is $5 million and the deferred payment is $2 million over the next 4 years. Not a very good move. Macquarie is that disappointed with the quantum of payout to Cadila. We've even seen Dr. Reddy's do this earlier, that in some of the products they actually out-license it. Tata Communication, Rekha Rakesh Jhunjhunwala bought in 19.6 lakh shares in the company. The seller was Amansa. Now remember, Tata Communication, which is trading, is the only sole telecom company. Over the past 10-15 days, Hemisphere Properties, which is the real estate arm, was demerged from it. So this is the pure play telecom that is being played, and at a later date, the Hemisphere Properties probably will be listed. Infibeam, the promoter, sold in 36 lakh shares in the company, and yesterday Wheels India, interesting bullies, 10.4% is what the promoter sold in the company. ICICI Prudential Mutual Fund, Sundaram Finance Holdings and IDFC Value Fund were the buyers in this block deal.
Okay, we'll watch out for some of these, some interesting bulk deals as well. Thanks, Darshan, for that. So, Amit, what about the key brokerage notes today?
Well, a couple of them. The first one is on capital goods, where HSBC is saying that multiple new measures have been announced over the last few weeks, which will invite fresh investments. And on the back of this, they're positive on export-oriented new industrial segment and capex supportive companies. Now, they're also saying that these initiatives are structurally will support structurally, but will not be enough for cyclical support when it comes to these companies. And on the back of this, they have upgraded rating for Cummins India and Bharat Forge to a buy from a hold, and for Bharat Forge they have hiked the target price to 700 rupees from 630, and for for Cummins India they have upgraded the target price to 700, and for Bharat Forge they have upgraded the target price to 520. For L&T, ABB India, Siemens India, they have hiked the target price to 1,780, 1,570 and 1,340, and for Bosch they have cut the target price to 15,500 rupees from 18,300. The second one is on non-banking financial companies, where Morgan Stanley says that retail borrowers with weaker economic profiles could see higher credit costs and lower loan growth, and on the back of this they have cut the EPS estimates for IDFC First, Indostar Capital and Shriram City Union. Now for IDFC First, they have maintained their underweight rating but have cut the target price to 24 rupees from 30, and they are saying that the corporate asset quality has surprised negatively for this bank and it remains vulnerable going forward. For Indostar Capital, they have maintained the equal weight rating but have cut the target price to 230 from 380, and they're saying that the concerns on wholesale loan book will constrain its loan growth going forward. For Shriram City Union, they have upgraded the counter to equal weight from an underweight rating but have cut the target price to 1,355 from 1,425, and the upgrade is on the back of the margin of safety that currently the stock price is providing, and that's the reason they have upgraded the rating. And they also say that they see best risk reward in Mahindra and Mahindra Financial and Shriram Transport, and the valuations for these stocks are at a 10-year low, and that's the reason they see best value in these two stocks.
Well, interesting takes, and some of the price cuts on stocks like IDFC First Bank are pretty interesting too. So, Amit, thanks so much for putting that into perspective. Well, since financials are the top talking point, let's get in our technical experts first and talk about some of these names, talk about ideas as well. Brijesh, Bhatia as well as Amit Harchekar joining to talk about that. Gentlemen, both of you, good morning. Thanks for joining in. Brijesh, let's start off with you. How are you approaching trade today? Yesterday, the Bank Nifty gave us a real scare. We might start off marginally higher today for the Nifty. What's the trading position in both of these indices from your end today?
Morning, Niraj. So I think best bet would be the Nifty. If you look at the yesterday's 11,400 were quite strongly held, and just adding to it, if I just look at the gap which it had made with the momentum-based with the Friday and Monday, a couple of days of momentum. So gap has been taking us a major support. And if I just historically move of the Nifty, Nifty general has a tendency to retrace to around 38.2%, 50% of the quick moves, and then resume its upward journey. And in the recent also momentum, we have seen that it has been retested its 50% of retracements. And plus, if I just look at the moving average, 55 exponential moving average on hourly charts has been acting as a major support as of now. So I think 11,400, 11,370 would be a key support area for this momentum to continue its upward journey. So I would take a long bet on Nifty rather than Bank Nifty at current point of time and look for around 11,700, 745 on the upside in the futures. And one can keep a stop loss of yesterday's low, which was around 11,445.
Okay. Amit, Harchekar, what's your sense on the index now?
Well, I would be quite cautious on the market despite yesterday's rebound. In fact, if you see last week, we had a spinning top pattern on a weekly basis that itself gave a warning signal that the rally may not sustain at higher levels, and because of that, we saw a good amount of weakness in banking stock. As I was saying even earlier, the 30-day historical volatility has jumped up beyond 22%, and that makes market more risky at current levels. So we don't expect market to stabilize at these levels. You will see good amount of volatility. In fact, we are expecting selling to continue in this market. We are expecting a target of 11,300 in the short term. Stop loss we would suggest is at 11,750. Now, if you see from a broader perspective, the mid-cap index has moved back towards the 12 September highs, and that is clearly telling you that this pullback is more of a bear market rally. Apart from that, if you see from a fund flow perspective, FIs have been continuous sellers in cash market. We haven't seen any great buy figure beyond 4,000 crore, which should excite us on the long side. What it suggests that fund flows towards emerging markets, they are suggesting a negative bias, and we believe more pain is likely to come in the markets in the near term. Apart from that, if you see from other sectoral perspective, we have seen a good rebound in...
Amit, if I can come in, I just have a small follow-up very quickly. Your target, if I'm not wrong, is 11,300, and your stop loss is 11,750. That's a very deep stop loss that you're placing.
See, basically, the risk-reward ratio is 1:1 because the entire stop loss will be at intermediate high, which turns out to be the spinning top high. So this is the minimum target we are expecting. It can even extend to 11,100. So as I said, the minimum risk-reward ratio is 1:1.
What about Nifty Bank? Because that's where bulk of the pain has been coming in over the last 3-4 trading sessions.
Well, Bank Nifty, we are expecting this move to be more part of a triangular up move, and that's why it did not sustain beyond 30,750, 800. We are expecting a short-term target of 26,600. So here, the stop loss we would recommend would be 29,700 on a closing basis.
Okay, let's talk stocks then. Amit, we'll keep it with you. What are your stock recommendations this morning?
Well, my first pick would be going short on IndianOpen Bank. We believe this stock is moving into a bearish triangle, and that's why all rallies are sold into. In fact, the larger triangle is projecting a target of 1,000 to 1,100. However, on the very short-term perspective, we would recommend a stop loss of 1,470 on a closing basis, and we are expecting a target of 1,250. We expect the selling momentum again to continue in today's trade. Our second pick would be going short on HUL future. Now the rationale is the Nifty consumption index after recent up move has completed a diamond top on the long-term basis. So we are expecting a crack of around 8 to 9% on a very short-term basis. So here, since HUL remains a heavyweight into it, we are suggesting a short trade into it. The stop loss would be 2,060 on a closing basis, and we are expecting a target of 1,900.
Brijesh?
Yeah, I would go on a couple of longs bet. Firstly, the NIT Tech. So if I look at the NIT Tech, it has seen a stellar rally. If I just look at before a stellar rally, it was majorly consolidating between 1340, 1350 on the higher side and back to around 1200 levels for quite some time. That range was nearly around 6.5 months of range. Stock has broken out of its range, rallied strongly above 1500 levels and back to now the retest zone of the 1350, 1340 levels on the higher side. So that has been retesting, and if I are just preempting that it might make a double bottom formation and the upward journey might resume. Why I'm preempting? Because if you look at the MACD, it is giving on the lower side, giving a positive crossover. So which is indicating that a possible move can continue towards 1500, 1540 on the upside. And one can place a stop loss of around 1340 on the end, slightly below the resistance zone. Second bet is on Indigo, because if you look at the couple of days of last week of action, stock has given a gap up opening and the gapping play candlestick formation has been witnessed, and stock has continued its follow-up rally in the yesterday's session. So I think at around 1889 one can take a long bet for the target of 2000 on the upside, and stop loss can be placed at around 1845.
Okay. So, well, interesting. After some time, we are seeing call at least. Maybe I'm back from a break, and that's why I haven't heard about Indigo for too long.
No, actually, Interglobe was quite under the radar over the last few.
It's almost moved up surreptitiously, right? 1889, and again out here too, Devina. It just seems from a stock price. If I can pull up SpiceJet as well, it just seems that the larger one is getting the share of investor attention as well in a meaningful way, because I don't think. SpiceJet has their gain, 125 rupees. So that's lying very, very low. It's Interglobe Aviation.
At the time when we started hearing about the promoter conflict, that's the time when the stock had actually started to move up, crossed 135 odd or something, and then now come back down.
To 125. And Interglobe Aviation from 1350 odd is at 1889. That's quite stellar, the kind of up move that we see in Interglobe Aviation. So really good going. Just one more follow-up on the technicals before we move on to the Bloomberg Edge and then get in Yogesh Mehta, fundamental guest. Brijesh, sticking with you, you are bullish. I want to understand if you can still remain bullish from a trade perspective on HDFC Life. We're talking about larger companies getting larger. This one at 602, hitting fresh life highs yesterday. Can somebody trade this afresh now?
Yeah, definitely. So if you just have, if you look at the rally of HDFC Life, it takes a big up move, consolidation for around 3-4 days, and it has been historically since its inception that its rallies around 4-5-7%, then consolidate for a couple of percent, then gives an again up move. So I think till now, if it doesn't break 580 from a trading point of view, I think it's still a bullish trend. One can take a stop loss of 580 and take a long bet for target of around 640-650 on the upside.
That pushes and the upper band way out of
whack. Yeah, on the valuation front for sure. But hey, who's to argue against prices? I think, yesterday Basant Maheshwari put out a very good tweet saying that people keep on arguing about how it's a very narrow market and people keep on crying about the valuations there. You don't make money that way. You'll make money if you bet on these names, because these are the ones that are making you the money. So
the large cap, good quality names will continue to go up, while the smaller ones will start to make.
Yeah, I mean, you and I may not like it that there's such a big valuation gap, but the fact remains that there is one. So what to do about it? Well, just bet on the ones that are winning for now. On to our special segment, Bloomberg Edge, wherein Yash Upadhyay tells us about a pattern that the Bloomberg terminal is throwing up on a stock, and I don't know if the terminal is saying anything different. Yash, what's the stock on the radar today?
Morning, Neeraj. So we're looking at Tata Motors, and there is in fact a sell signal which is generated by the MACD indicator. Now, like we always do, let's first try and understand what the MACD indicator is and how do you interpret it. The MACD is a trend following momentum indicator, and it shows you the relationship between the two moving averages of the price. How do you interpret it? You go long when the MACD line crosses above the signal line, and you go short when the MACD line crosses below the signal line from above. Now, coming back to the price chart of Tata Motors, and I'll first talk about the MACD. Now, that is the one in the lowest panel over here. The blue line, that is the MACD line. That is the MACD line, and that is given a negative crossover. So it's crossed below the white line, which is the signal line as well. But it's not just that. You also need to look at the action in terms of price. And yesterday we saw another 2% drop in Tata Motors, and with that, it has now fallen below a crucial support mark of 120, where it had made a short-term, support for the counter. The RSI too has topped out around the mark of 60. So this is the third time that it has come to these levels and has also given a negative divergence as far as the RSI is concerned on the daily time frame. So all these factors put together, they indicate that Tata Motors has further room on the downside, given the fact that the MACD is indicating a negative crossover, the RSI has given a negative divergence, and the stock too is trading below the mark of 120, which was its support mark.
All right, and how well has this worked in the past, Yash?
So Devina, 4 out of the last 7 times that the MACD indicator has given a negative crossover on an average, over the next 1 month on a closing basis, the stock has fallen anywhere between 5.5 to 5.7%.
All right, Yash, thanks very much for that. Obviously, Tata Motors, I don't think it ever really got out of that bear trend that it had started off with, and there's been continuous selling that's been coming in. Probably these shorter period bursts gives you an opportunity to make more money on the downside for Tata Motors. This year, it's already down about 31, 32 odd percent. Bringing in Yogesh Mehta, founder at Yield Maximisers. He's joining us right now on the show as well. Yogesh, thanks very much for taking out the time. I want to first, get your views. Not on the index, but on those three stocks, the Indiabulls group stocks, which were in focus in yesterday's session, and which likely will remain in focus today as well. What does one do if one is invested already into these companies?
Good morning, Devina. Thanks for having me. I would say for Indiabulls Group particularly, to be very frank, I was on a bull side. But the LVB Bank and the merger announcement has come, they are seeking for the banking license, and then the unfold of the very recent happening which has come out on the news flash and the reports by various media. So that shows some kind of, there is no smoke without fire. The same incidents came in erstwhile issues where the stock has gone down almost 95%. People have eroded their capital. So I would say there is no smoke without fire. The investors should be very cautious about that and avoid getting into as a fresh investments. However, it will be too difficult to say right now that to exit at this point in time, but they will have to take a hard call on this before their capital gets wiped off further. And once the clarity emerges, then it would be prudent enough to relook at the investments. What I would say is all these group companies are interconnected in terms of their own businesses. And Indiabull Real Estate or Indiabull Housing Finance, similar what I've seen in DHFL and SGIL issues. So I would say totally avoid as an investment, and those who are having it and can consider, they should consider this as a sell opportunity at current price as well.
Today, auto sales numbers also will start coming out. What are you going to be doing ahead of that, Yogesh? And do you feel that it's probably the right time to start making minor investments into most of these names?
Devina, I'm bearish on auto numbers somehow, not because of the slowdown impact, so-called slowdown impact, but I would avoid because this is not the sector which will make money over next 1 or 2 quarters more. So probably prices will remain here. Yeah, we can look at some of the names like leader of the sectors like Maruti at 6,600 again, and new launches are commencing. But this month's sales would be around 1,17,000 to 1,19,000 odd, as the channel check suggests that footfall and inquiries are increasing, but the pickup has not happened due to this Shraddh period. But probably now good chances that in October month, due to festivities with Dussehra and Diwali both in this month, and that will drive the sales. So probably that would be a good for sentiment temporarily. I would say if anything needs to be watch out for, not as an investment but as a trading idea or maybe for a short-term perspective, then Maruti could be on the cards and Hero Motocorp could be there. And avoid commercial vehicle right now, though the scrappage policy would be beneficiary to Ashok Leyland. But the numbers are not showing any traction on the higher side, so profitability may get dampened. And corporate tax rate cut will not have material impact on this balance sheet of all these companies. So at this point in time, I would say those who want to look at investment can look at Maruti, probably gradual way, not at one go.
Yogesh, good morning. The gas price cut that has been announced, slightly steeper than what was anticipated. Would you believe that ONGC, GAIL, Oil India could react very adversely, or would it be a small negative reaction?
Good morning, Neeraj. Again, policy stance by the government cutting these gas prices would be negative definitely for at least ONGC at this point in time, because already they are looking at rising these gas prices, because they are like they have got or they got a dual-edged sword. If the gas prices or the petrol prices are crude prices are lower, they have to have a subsidy burden, and if it is on a higher side, they are not making any much money. So this gas price revision on the steep below the anticipated prices by ONGC would be looked at like a little negative, but stock has already hammered down to such an extent that the severe negativity or severe reaction is not. I don't think so that will happen. Probably 4-5% at best, but not below that. So only the range bound impact would be there.
Okay, well, Yogesh definitely got one thing right, and that is HDFC Live. We've spoken about it ad nauseum, but just mentioning that stock, and Yogesh Mehta has been a buyer in that for some time now. That stock has done really well for itself. Just looking at stocks which are trading at life highs, amongst others, and Hindustan Food stands out there, 530 for that stock in trade yesterday, went up about 1.5%, and therefore nudging this fresh higher levels. So do watch out for that stock too in the session. The contrary that a lot of people have from a trade perspective is what to do with the second rung, not in terms of quality but in terms of size, the banking names. So 3 names out there, any one of them good for a trade, Brijesh. Federal Bank, DCB, actually let me not give RBL Bank, it's kind of shifted now in terms of preferences. So Federal Bank and DCB, would you trade either of them?
I think better I would go for DCB, because if you look at the structure, it was quite consolidating between 185, 190 on the downside and back to around 220. Yesterday's fall or last couple of days fall, it has tested back to around 195, 197. So in case today's session it's sustained about 190, 92, can take again a long bet, because I think after strong rally it has been consolidating, and possibly we might see again 215, 220. Till it is not breaking 187, 188, I think quite possible back to around 215 on the upside.
Okay. Amit, actually come back to you on, these small finance banks also quickly. What's your take on an Ujjivan, maybe an AU small finance bank? What happens here? Do you have a trade here?
Well, I have a very negative view on the banking sector. I think Bank Nifty has again started a new down move, and as per the small finance bank is concerned, Ujjivan is the one stock which has seen a retracement of around 50% of the entire down move. We are expecting next leg of down move to take towards 285. However, we would suggest going short below 309 on a closing basis. The stock which we like to go short would be Yes Bank at these levels. We believe 45 was a very multi-year support that has got broken, and remember on 8th of August there was QIP which was done by most of the mutual funds at a price of 88. Right now the stock is trading at 41. We are expecting the stock to go towards 22 to 23 zones. So I think keeping a stop loss of 45 on a closing basis, one can remain short in Yes Bank.
Okay, so going short on Yes Bank and not too optimistic either on Ujjivan. Pre-open on your screens for the Nifty 50. We are opening muted actually, not too much in terms of a price action there. Sensex also just a 0.5% bump that we're seeing there for the index. Coming to individual stocks then, you've got Bharti Airtel. Obviously, these prices will stabilize, but the initial pops are showing you a 7% cut on Bharti Airtel. Now it's down to 4%. Infratel is also down. Hindalco is down 1.25%. Tata Steel is down almost 1%. You've got ITC, Coal India, Grasim, Sun Pharma all looking weak in the early morning trade. Britannia also is down closer to 0.5%. So a few losers, but I believe the gainers outweigh the losers in terms of number at least. I'm going to start off with some of the other gainers. BPCL, for one, is showing you an unnatural 10% pop at the start of the trading session, but we'll wait for what comes about once the prices settle in. ICICI Bank at 446 is showing you a 3% move. IndusInd Bank recovers a bit after yesterday and some clarifications given by the management. Axis Bank up 2%, Asian Paints up 2%, Ultratech, SBI, HUL, UPL, all of them trading higher in the session. So banks have seen a bit of a recovery. L&T 2 now at 1483, up about 0.5% plus, and some IT names also doing okay for themselves. With regards to the currency, the rupee opens with some strength this morning. 70.77 to the dollar is where the rupee is currently trading at.
Okay, the mid-cap end of the market, I want to pull up Indiabulls, the group, and see what those stocks are doing in today's session after the conference call that analyst call that they had yesterday. The first tick on the pre-open session seems to be negative. Let's see if this lasts. 10% lower for Indiabulls Housing Finance. Ventures and real estate, which were locked on a lower circuit any which ways yesterday. Let's see how they are starting off. Maybe 5% lower for Indiabulls Real Estate. And ventures about 10% as well. So no, doesn't seem like there is anything returning. Devina must have marked Yes Bank, but let me just revisit this since I'm talking about these names. And RBL Bank is the other one. Yes Bank seeing some stability. Let's wait and watch. RBL Bank is the other one, which corrected thick and fast yesterday. And for now, is looking okay. I mean, you know, the others, I don't even want to talk about HDL and a Cafe Coffee Day, leave them alone, or a Lakshmi Vilas Bank. Those will be starting lower. BPCL, BPCL, well, might start off higher. Let's wait and watch. I doubt there'll be a 10% uptick, but maybe there could be an uptick or two here on. And watch out for the ceramic companies. Watch out for all of the fertilizer companies, all of which benefit. So I think Somani Ceramics, National Fertilizers, RCF, these are the names which might benefit, probably will benefit fundamentally. I don't know how much the stocks will do today, but fundamentally could benefit as a result of the lower gas prices. So you got to keep that at the back of your mind as well.
BPCL, I think, still sticks with the 10% gain.
But might change.
Yeah, but I also just want to pull up Shipping Corporation of India, Concor, because these are the names that were cleared by the group of secretaries yesterday with regards to divestment. So you've got a lot of action that's, that was pent up in the system with regards to, divestment getting pushed, and now they've actually got the clearance to go ahead with it. And all of these names, actually 5 PSU names was what got clearance. So including these 3, there is a Northeastern Electric Power Corporation and a THDC, which will also help the center rake up closer to 60,000 crores in terms of money that comes in via stake sale and all of these PSU units. So watch out for all of those and more. So BPCL, the key target there, which has been moving up on the back of news of privatization. Still holding on, but it's still early. Probably wait for another 5 minutes to see whether this comes off or sticks with 10%. 517 on BPCL. Quick word, Yogesh, on some of these PSUs.
Devina, for this PSU's divestment, which has got a green signal yesterday, but I think the major part would be major money, which will be fetched by BPCL. But I think these are still on an initial and niche level. There should be a potential buyer, and that will keep the momentum for the share price on a higher side. However, on the fundamental side, on marketing margin and the refining margin both together, it is trading at a fairly valued right now at near to 500 or 475 level, which was yesterday closing. So I think this may create a fancy, but at this point in time, at current prices, it leaves very little room upside, and only the upside will get unfolded further if there is a potential buyer name which should be on a AAA rating, and then only we can see some more upside. But otherwise, HPCL, which is at 50,000 crore market cap, and BPCL has crossed or near to 1 lakh crore market cap. So that 50,000 crore worth of investment and additional top up on that, we need a strong name for that. Let us see how it turns up.
Okay, technically though, BPCL may or may not start 10% higher. Let's assume it starts off some percentage points higher, Brijesh. What's the trading? Until what levels would you be comfortable buying BPCL from a risk-reward perspective?
I think if I just look at the monthly chart, while we're discussing, I was looking at the monthly chart. So it has taken out nearly 390, 400 level, while it was quite resisting for quite some time. Now, if we look at the volume, the quantum of volume it has created in September, which is one of the highest we have seen post 2010. So I think a big chunk of volume has been accumulated on the monthly basis, not on the weekly or daily basis. So I think at around 450, 470 any dip, though it is opening above 500, I would like to accumulate 25% at current point of time. Add
above 500.
Yeah, at 25%.
You're comfortable doing that?
I'm comfortable at 25% and add on every dip to around 470, 450. I think this is going into the new league now again. If I just look at the 2012, 2013, where it was consolidating for quite 1.5, 2 years, then a rally from around we have seen from 2013 back to around 120, 130 to 400 levels. So I think similar momentum might see in next couple of years for BPCL, and I think definitely a investment point of view, possible 670 to 745 is the level on the upside I'm eyeing on.
I think we should revisit this in about a couple of minutes. It's now starting to cool off a bit, but having said that, the price is still positive at 7% higher or 6% higher. It's 906. In a couple of minutes, the rates would settle down. So it may not start above 500, but it could still start off with a bump up, and it'll be important to take a call there as to whether at that point of time makes sense to buy.
And it's not just about today's session, Neeraj, just about how the stock has been moving since the first whiff of privatization came about. And what does this do now to an IOC, whether it kind of tries to match up with BPCL, because it's not been doing that. BPL has been operating in its own silo so far. It's been moving and doing what it's been doing on its own accord. IOC, though it has been going up,
but nowhere close to 40%.
Nowhere close to what BPCL has been doing.
Yeah, but certainly some legs out there for the OMCs, and let's wait and watch. In today's session, by the way, on the Nifty 50, as rates stand as of now, the top two gainers might be BPCL and Indian Oil Corporation. So there's certainly some traction into those names in the session today. Not too many losers, by the way, keep that at the back of your mind. The one sore spot, though, still continues to be Z Entertainment, which might start off lower in the session today as well. But the pre-open rates have now almost settled down, and we have the oil marketing companies as the top gainers. Eicher Motors, maybe a bit of lost ground recoup, and then we'll watch out for the auto names because the numbers will start trickling in thick and fast post 9:30. Very important to see what happens there. The estimates are that most of the numbers will be very lower. Let's see if there is a positive surprise there. Yogesh, what's the stock that you're buying at the current point of time? Where is it that you're putting fresh money to work?
Neeraj, my picks would be my favorite would be on consumer names like Marico or the ITC of the world, where both are quoting at significant discount to the sector P multiples, and the ROEs are at the best of the standard. There is no negative news, is good news for ITC. There is no further hike in duties by the government in so many of the meetings. So that would give some kind of thrust for ITC to come back, and probably at around 260 levels, it is still available at 26-27 times. Even if it moves towards 32-31 times, it will be a more than 20-25% kind of a return. And the downside seems to be very limited. It's just a contra buy. And the other one would be Marico. The copra price and other stuffs are very much in favor with Marico, and currently it is at 390-395 level. And that is also at around 35-36 times P multiple, with the best of the ROE, ROCE numbers. And I think the growth rate would be 17-18% for Marico over next 2 years. So we may see a new life high in Marico over next 1 quarter odd. So these are the picks from FMCG. My favorite will remain there at HDFC Life. I think the new life high is still there, more potential to go. In such kind of market, it is making new life high every day. So around 600 level now, still I think for the long-term perspectives are very much intact. And those who want to keep long for a prolonged period of time, for 3 years, 2 years, they can still accumulate the stock at current level. So that is what I'm looking at.
Okay, got that. So even HDFC Life being one of the favorites there, and Yogesh likes them. We've come to the end of pre-open. Nifty is up 40 odd points, and the top gainer still remains BPCL with gains of closer to 6%. Well, we're just minutes away from market opening, and we tell you all that you need to know to stay ahead in trade today. Government cuts natural gas prices by 12.5%, and prices at difficult fields face cuts of 9.5%. This move favors gas users such as ceramic, fertilizers and city gas distribution companies, while gas suppliers may suffer.
Economic Offences Wing of the Mumbai Police files an FIR against the former management of PMC Bank and promoters of HDIL based on a complaint from the RBI appointed administration. Now, a special investigation team will take over the case.
Cadila Healthcare to sell its interest in Zypeta Mag to Medcure for upfront payment of about $5 million and deferred payment of $2 million over the next 4 years.
Huhtamaki to acquire Mohan Mutha Polytech's flexible packaging business for 80 crore rupees. The acquisition will be funded by debt and expected to be closed during the December quarter.
In key bulk deals, Rekha Rakesh Junjunwala acquires 0.7% stake in Tata Communications at 370 rupees per share. Amansa Holdings sells 0.65% stake at the same price.
And lastly, UBS says Quest Corp's Trimax resolution is meaningfully positive. The brokerage believes market isn't pricing in the ROC improvement and potential re-rating.
Brijesh, I just want to talk to you about SBI as well. Do you see the potential to move beyond 300?
I think at short-term point of view, no, I would slightly avoid SBI, because if you look at the fall which has been witnessed from higher levels, so I would slight current point of time avoid PSUs and look for the private like ICICI or Axis to take a long bet.
ICICI, where do you see it going?
ICICI probably I'm expecting 470, 475 in the trading point of view, and keep a stop loss of 426 on the downside.
Well, let's wait and watch what happens. I mean, that stock, while it corrected yesterday, is still holding out firm. The Indiabulls Group stocks continue to languish. Indiabulls Ventures and Indiabulls Real Estate both start off lower. So I think Indiabulls Housing Finance is not as bad as it was in trade yesterday. Let's wait and watch what happens. We don't quite know about the collaterals, but some of these other companies are doing so well. Maybe we spoke to Yogesh about them, but Yogesh, we've spoken about the divestment candidates, Shipping Corporation, BPCL, Container Corp, etc. The fertilizer names, wherein gas prices have come off. Do you think the fertilizer or the ceramic companies stand to materially benefit? Is there a particular name that stands out?
Yeah, Neeraj, for fertilizer, it's too difficult to say because they are hardly a profit making, and this gas price revision will take some 2-3 quarters more to get a set of effect. But on the ceramic side, yes, it will be a major beneficiary, and corporate tax rate cut plus this would be a added bonanza for them for this year's balance sheet if it remains constant for next 2 quarters as well. Then Kajaria Ceramic is the one with the highest capacity. They've commenced one new plant on this 29th of September last week. So I think that would be beneficiary. So Kajaria Ceramic could be the one, would be a potential fancy stock for at least for next 1-2 days.
Okay. Amit, Harchekar, quick view. Bharat Petroleum at 598. Would you buy it? Excuse me.
Well, my sense is I will wait for the prices to stabilize around 485, 500 basically. On a long-term basis, I think 450 remains a make or break level. As long as the stock trades above that, the trend seems to be positive.
Okay. So do watch out for that name as well. That seems to be the sum and substance of today's session, to be honest. Some of the PSUs, some of the divestment candidates, and the fertilizer names, the gas price beneficiaries or losers, as the case may be. That seems to be the order of the day today. And of course, the Indiabulls Group continues to languish in the session today. Even stocks like CG Power, etc., have all come off. So let's try and nail it down to that one top stock that both our experts believe they should be betting on. Brijesh, let me start with you first. If you had to bet on one stock for a trade today, which one would that be?
I would go for NIT Tech. So I think good upside is still left on the momentum, and stock is forming double bottom at support zone.
Okay, Amit Harchekar, what's going to be your top call for the day?
Well, I would short State Bank of India. The stock has broken down from a multi-year rising wedge. We are expecting it to go down to 255. Stop loss for the trade would be 280 on a closing basis.
Okay, so those are the top calls from both our technical experts. Yogesh, take a moment to thank you, of course, for joining in today and giving us your thoughts. Really appreciate your time. Brijesh, stay on. We'll just take in opening thoughts from you post-market open, but 15 seconds left for the markets to kick-start trade. We'll have a start which is in the green. The pre-open rates have suggested that. The question is, can the Nifty Bank recover from yesterday's walloping and move higher and stay higher? That's the key question, really. We'll get to know about it in a few moments from now. Here's how the markets are starting off. About 1/3% for the Nifty and the Sensex. The Nifty Bank, a bigger pullback than the Nifty and the Sensex, simply because it corrected so viciously yesterday, about 260 points. So clearly, the devils of yesterday kind of being bought into. Nifty 50 and the Sensex to about 0.5% now. So there is strength on open for the large caps. The mid cap and small cap indices should also come up on your screen. Let's see if they are reacting. About 0.5% for the mid cap space, or 1/3% actually for the mid cap space. The small cap space about 1/4%. So all indices starting off in the green. The Bank Nifty leading the charge. 300 points higher for the Nifty Bank, up about 1%. What's moving? Well, clearly has to be banks. Or BPCL is the star, really. 6.5 or 7% up for BPCL. That's a strong start to the trading day for the oil major or OMC major, and IOC too, about 2.5% higher. Yes Bank, 3.7%, so well, recovers a little bit of lost ground from yesterday. Similarly for IndusInd, Axis, ICICI, SBI, all of them start off on a positive note. So banks are certainly holding on to some gains in the first 1-2 minutes, and the auto names too starting off positively. By the way, HDFC Bank is contributing as well, and I don't see Bajaj Finance amongst the list of losers. So A small uptick, but a fresh high again for Bajaj Finance, about 1% higher. So this one would be northwards of 4,000 quite comfortably. Yesterday closed above 4,000 or thereabouts. Now trading at stratospheric valuations for Bajaj Finance as well. Really strong show being put up by these names. So good going, good start. Let's see if this lasts or no. Bank Nifty, clearly the main star. Just a couple of pockets that I want to highlight. The Indiabulls Group stocks, and let's see how they have started off in the session today, because that was a key set of stocks. So Indiabulls Housing Finance, Indiabulls Real Estate, etc. should all come up on your screen. They should. Indiabulls Housing is certainly doing well. Maybe not so much for Indiabulls Housing Finance. Maybe not so much for Indiabulls Real Estate and Indiabulls Ventures. So those two might be languishing a little bit in the session today. Devina, what are you spotting?
Keeping it with the divestment theme, you already spoke about BPCL. So the other two contenders out there, Shipping Corporation of India, that's up 10% right now, and you have the likes of Concor also, which is doing well in the session. I think Concor is up about 5%. So both these names are extremely active. Then you've got the beneficiaries of the gas price cuts. You've got Somani Ceramics. You've got the fertilizer companies, likes of Deepak Fertilizers, which are 6.5%. Chambal Fertilizers has moved up. RCF has moved up. All of them, 3.5 to 6% gains coming in for most of these names. So that pocket is active in today's session. Granules India, that's moved up about 3.5%, doing well for itself. Kajaria Ceramics is the other one that's following what Somani Ceramics is doing. Again, a beneficiary there of the gas price cuts. It's up about 2.5%. LIC Housing Finance 2.5% higher. Piramal Enterprises, National Fertilizers, HPCL is up about 2.5%, following what the rest of the oil marketing companies are doing. I want to pull up Brigade Enterprises as well, because yesterday's session saw Brigade up 10%. Whether it follows through today or no, it's absolutely flat. About 215 odd on Brigade Enterprises. Federal Bank, Syndicate Bank, some of the names that lost considerable ground yesterday have recovered in today's session. So even an RBL, Edelweiss, which was down 10% yesterday, is up about 2.5% in today's session. So there is a slight amount of optimism that's come back into these stocks. Some recovery, some shorts getting covered. Aside from that, in terms of the losers, we've already spoken about all the Indiabulls Group stocks, but Vodafone Idea, after that big 7-8% move yesterday, the stock's down 7% in today's session. Coffee Day, CG Power continues to reel under pressure. Lakshmi Vilas Bank, 5% lower circuit again for that counter. Then you've got Diwan Housing Finance, which is looking weak, and Gati continues to trade lower 2 or 3 straight days in a row now. So Gati is also down in today's session. Godrej Properties looks slightly weak. Most of the stocks there. Still a buyer's market, still the breadth is positive, and 719 stocks are advancing this morning. You've got a decline of just about 375 stocks.
Okay, Brijesh, one quick thought. Anything that pops up on your screen?
So I think I would go long on Volta. So if you look at the momentum after 2 years of consolidation breakout, stock was trading around 670, 680 since last couple of days. So now it's slow and steady gaining momentum. And even if I look at the OI structure, it is slow and steady. The long buildups are coming above 670. So I think 680 a good long bet, keeping a stop loss of 660, and I think 735 could be targets in 1 week on Voltas.
We'll leave it at that, Brijesh. Thanks so much for taking the time out and giving us your thoughts. Amit, Harchekar, just quick opening thoughts from you as well. Any stock that stands out for you? Banks are actually doing much better today.
Well, as I said, I would be quite cautious with this rally. Remember, the Chinese yuan has been depreciating again. It's only 0.4% away from the all-time high. What we believe is HDFC is the one stock which can look out for from a shorting perspective. Since the way the stock has reversed from in last 2 trading sessions, we are expecting a target of 1850. So here we would suggest a stop loss of 2050 on a closing basis after this pullback.
Okay, watch out. Amit, thanks so much for joining in and giving us your perspective. Watch out for some of these companies. The oil marketing companies in particular, they are really setting the stage on fire right now. BPCL is up 8.5 or 9% at 510, and Indian Oil Corporation 5% higher at 154. Pankaj Murarka, Chief Investment Officer at Renaissance Investment Managers, joins us right now on the show. Pankaj, well, we don't have the confirmations of that, but apparently the panel of secretaries has cleared these divestment, and that's why all of these companies are up and about in trade. But that seemed to be the only alternative. With the borrowing target being kept as it is, you would have to presume that the government will be very aggressive on the divestment front. Would you believe, therefore, that PSUs are firmly in the hunt again? They've been shunned for a long period of time. They may not be the greatest of companies, but from a tactical perspective, PSUs are back in the hunt?
Yes, I think so, because the business value or strategic value is much higher. investors have had a disliking for them because across the board, across sectors, PSUs in terms of their shareholder returns have not done well over the last 5 years or 7 years if you see. In fact, there's been significant erosion that has happened in their market cap and wealth. And obviously the biggest loser has been government because they are the largest shareholders. Given that the government is constrained and they need significant resources. And obviously once some of these businesses move in the hands of private sector, I think their efficiency and productivity can be enhanced significantly, right? And in fact, experience tells us if you go by past history of divestments, whenever companies have been divestment, classic cases Hindustan Zinc, their productivity and efficiency gains and eventually their profit growth and return ratios have over the next 5-7 years post the divestment have grown multifold because private sector can squeeze the assets much better, drive them much more efficiently and so on and so forth. So I think this time unfortunately governments work or act only when they're pushed to the corner and seems like this time the government is being pushed into a corner. So hopefully this should sail through, and if that does happen, then I think there is value unlocking that will happen in a lot of these companies. It's not about just the divestment, but I think the more important thing is sweating the assets and driving better productivity from the assets post the divestment. That's where the real gains are.
And where do you think, with the assumption, and again, all of this is a hypothesis, right? We can only work on assumptions, but with an assumption that some of these companies get handed back or get handed to the private sector, which of these government assets do you believe hold the potential for some multi-year profitability and operational gains? Would it be all marketing companies? Would it be something else?
I think across the board, because these companies are pretty large in their respective sectors. They're actual dominant players. You look at the oil marketing companies, you look at Concor, which has been talked about, you look at Coal India, they are very dominant or leaders in their respective sectors. Having said that, because they are owned by government, and I think there are a lot of low-hanging fruits that exist in these companies, meaning the average salary cost of Coal India, is 3x of what exists in the private sector. With about, I don't know the last number, but I think they have about 2.8 lakh or 2.6 lakh employees. And if you look at it on the metrics in terms of productivity per employee or the output per employee, probably it will be one of the weakest. Obviously, government can't fire people and so on and so forth. Private sector can give them a respectable VRS, drive productivity through significantly more investment into better equipments and to drive efficiency and so on and so forth. And I think those kind of opportunities exist across the board with all of these companies. So I think if we really, and I think the government itself could be the biggest beneficiary of it in terms of the value unlocking that can happen.
It's interesting you say Coal India because I may be, shooting way too early, but with all countries getting so conscious about the environment, and we just had the, the Bloomberg Global Summit right now, where there was a talk about the whole new clean world and countries moving towards cleaner fuels, biofuels, and they actually projecting a big drop in consumption and of thermal power in a way and thermal fuels. So do you feel that in light of that, Coal India, in its own case, the purpose stands defeated?
See, while everyone is conscious of the challenges that lie ahead in terms of climate, the fact is, I think, as far as India is concerned, I think we're trying to jump the gun. The most developed countries in the world, including US, Europe, China, and China is now a developed economy, being the second largest one, they've been the biggest contributor to pollution and environmental hazard over the last 30-40 years. India is just embarked on the journey of industrialization. Our contribution to global warming and all of that is minuscule as compared to...
But doesn't mean we keep adding to it to come to that
on
level.
an incremental basis, even though, see, the point is, while we need to take care of the environment, we also need to balance that with our own growth and developmental needs. India needs thermal power because you cannot have, the entire ecosystem run on green energies because they are not stable. So your base power requirement has to be either thermal or nuclear. The nuclear industry in India is almost very nascent kind of thing. And obviously we got access to nuclear power only just about 7-8 years back, because until then we didn't have access to nuclear fuels because some of these global developed economies were not willing to supply us the fuel. So we need, if we want to grow and accelerate our growth, we need to meet our development needs. We need power because that's one of the core requirements. And we have no choice but to go to thermal. So I think as far as India is concerned, our coal consumption will keep rising for the next 15 or 20 years. It's not going to fall off.
The other pocket I want to talk about is, obviously you've been following what's been happening to PMC and the big swirl around there around cooperative banks, but not just cooperative banks. Do you feel that this brings about a little bit of a scare amongst the retail investors as to maybe the smaller rung PSU banks, which up until now, some of them have moved out of the PCA, but it's still a big question mark, and there could be a big risk out there?
I don't think so. As far as state-owned banks are concerned, I think the buck stops with government, they being the principal shareholders, and now I think they've taken the second step forward in terms of having the second round of merger and all of that. So I don't see any of those risks with any of the state-owned banks. If at all, I think now it seems like they've been adequately capitalized. Even if they run short of capital, I think the government will have to step in. Cooperative banks, this has been one pocket of the whole banking system which has been around, and if you go across, meaning I can talk about Maharashtra, but something similar happens in UP and some of the larger states. It's been a long time. Politicians have used them as a vehicle to fund and finance a lot of their activities. And the only thing which disappoints me is I think it would have been better off had the regulator been slightly more proactive in dealing with some of those issues, because while these issues have been cropping up now, the cooperative banks have gaps in their governance, in their operations. It's been known, to the community and to the regulator for a long time. And the regulator, I think, somehow has probably had dealt with them with a very loose hand, So
tightening the nose now.
Yeah, I should have done it. I think they should have done it much earlier.
Okay. I have one final question, Pankaj, today, and that's on telecom. The reason I bring that up, again, topical in nature, this conversation is very different from the ones that we've had in the past, but because it's a lot more topical. Yesterday, there was this talk of maybe Jio raising some prices, as a result of which Bharti, Vodafone, Reliance, all of them went up. They've come down today. Do you think it's sooner rather than later that would happen? And therefore, is there a bet that you would make on telecom on any of these three names?
We own telecom names, including...
You own telecom.
We own Reliance, which is effectively now the largest player as well. I think so. I think the worst is clearly behind from India's telecom growth story. We are just, I think we've had this conversation earlier, we are just embarking on a data consumption story.
Oh yeah, we've had this conversation.
Data consumption in India has grown at something like 15x over the last 2 years. And still, I think that will grow exponentially. My view is, meaning the average data consumption today is about 8 GB or something. This can be like, keep growing at 15-20% for the next 10 years. And now that, you just three players, it's kind of oligopoly kind of industry structure. So I think these guys are here to make money for a long time, because now for the next 15 or 20 years, I don't see a new entrant coming into the sector. Yeah, so, and it's a business with very high operating leverage. So, meaning once you generate incremental volumes and revenues, 80% of that, if you take away government taxes, 80% of that flows to your operating profits. So it's a business where the operating leverage is very, very significant.
Yeah.
So, meaning we are pretty positive. I'm pretty positive on the sector.
Okay. Well, let's wait and watch. Hopefully, 1 year down the line, Pankaj, when we talk about this, the sector would have generated some results or returns for the investors as well. Reliance has probably done that. The others probably need to step in. But take a moment to thank you for joining in today and giving us your perspective. Really appreciate your time today.
Thank you.
Well, that's Pankaj Murarka, a host of very important issues, by the way. But we need to slip into a break on the note that the markets are doing very well for themselves. On the other side of the break, we talked to JSPL about how it expects to fare in the lower tax regime amongst the rising trade tensions, though, with Managing Director V.R. Sharma. And does the prompt corrective action against Lakshmi Vilas Bank put the Indiabulls housing finance deal at risk? We asked Gagan Banga about the same.